Hey, good morning, everyone. Marty Bezora here, 10th of November 2021, Wednesday. Well, the hand is healing a little slower than I expected, so I may be on the video for, I don't know, a few more days. Jumping right in this morning, we'll do the market update first. The Dow is down 45 points, which is 13 basis points or 0.12%. NASDAQ composite is down 70 bips or 0.70%. That's not small. The S&P 500 is down 0.25%, and the Russell 2000 index is down, where is it? 0.19%. Let me give you commodities. I didn't do that yesterday. In the commodity space, we have gold up almost 2%, gold futures. We have the actual gold spot price up more like 1.71%. Silver is up 2.62%. Copper futures are up 0.33%. Oil futures are down 0.11%. And the ag complex, which I basically just give you the ag index that we track when I say the ag complex, that is up just over 0.25%, 0.26%. Our core portfolio this morning is positive by 0.13%, so definitely going the opposite way of the market overall so far this morning. Of course, we have a lot of stocks that are down like the market is today, but our commodity exposure and commodity related exposures and things like emerging markets, which I talked about yesterday, those are up on the morning as well. In fact, our best positions, top 5, are silver, carbon credits, gold, AT&T, metals, base metals miners, and bank stocks. Our bottom 5 are AMD, the chip maker, solar stocks, uranium miners, MP Materials, which is a rare earth miner, and Albemarle, which is a lithium miner. So with regard to AMD, that's one we added, within the last few months. It was definitely this year. It wasn't that long ago. This was one Nick brought to the table and did a lot of good work on it, and we decided to add it. Since then, even after today's 3% decline, it's up 37% since we bought it. About a month ago, I want to say, when we did some pairing of other things, we bought and added, maybe 2 months ago, because we put a position in, then we added to it in the semiconductor index ETF, and it's up 12.43%. Call it 12.5% now, even after being down 1% this morning. So yesterday we were kind of exploring that space in particular and really looking for where it could go wrong. My contention there is that it's in the tech space. And tech stocks, as I've been preaching for well over a year now, are probably in trouble in a higher interest rate environment. And we're seeing that, of course, this morning, and that can probably explain a lot of what's going on with tech. There's also regulatory risks and so forth in the big tech space, which dominates, the S&P 500, the NASDAQ 100, and so on. But not our favorite sector, even though it's been the world's favorite sector for a long time, but not ours going forward. In this environment, we think that it is way out in front of its skis, and it's a potential weak point in the market. We're going to own some. We do own the tech ETF. It's been a very good one to own. So it'll be interesting to see, but we think we're going to have to be more selective going forward, like we are with AMD and with the semiconductor index. Okay, so the stuff I made notes on this morning to talk at you about. I've been mentioning Japan a lot. Yesterday, another research partner of ours, BCA Research, they just do a tremendous job on global macro. I really use them as much for their geopolitical research, which is a very deep dive, as I do for anything else. But just some of their comments. This is just from yesterday. The Japanese economy is finally staging a comeback. Tuesday's release of the October Economies Watchers survey confirmed that economic conditions are improving. Current conditions jumped 13.4 points to a 7-year high, beating expectations of a milder move. The expectations component gained almost a point to 57.5, which is just a little bit above expectations. So anyway, they are growingly bullish on Japan. And then overnight, yesterday, Japan's machine tool orders, which is considered kind of an indicator for the global economy, it showed a surge in foreign orders in the October data, and it's nearing a record. Now, the big news this morning is on inflation. October Consumer Price Index that came out this morning. Headline was 0.9% month over month. And the core, which X's out food and energy, was up 0.6%. We're looking at a CPI that's running at a 6.2%. Very high inflation relative to what we've seen in a long, long time. And we've been talking about what our expectations are going forward. And then core, which is when you X out food and energy, up 4.6%. In our macro assessment last weekend when I did the video, I mentioned that, when these bottlenecks ease, you're going to begin to see, inflation roll over a bit, and folks like me who are structurally inflationists, if I can say it that way going forward, are going to look really dumb for a while. And I said that that's beginning to show up in inflation break-evens, the difference between the yield on Treasury inflation-protected securities and the regular nominal bond was beginning to roll over. We'll scratch that. As you can see, it's turned back up quite dramatically. The other thing I wanted to show you was gold, right? Gold has been really fighting with this 1800 level right here, $1,800 an ounce, 1864 this morning. This is the kind of spike that technicians have been looking for. They haven't been really bullish. Technicians, the people who trade gold based on the charts, have said over and over again, we need to see an aggressive break above 1800 before we can see gold, take off and maybe threaten these levels from earlier this year, right? We're pushing 2000. Of course, this big spike here is in response to today's inflation prints. Our gold ETF, which is how we express our bullish gold position in our portfolio, you can see that we did some work on this here on the video a while back, and I pointed to this buy zone in here, and I pointed to this lower low, but these real positive divergences on the momentum indicators. And you can see it looked like it was working out, came down, tested that low again, but the momentum indicators, the MACD and the RSI, still had bullish divergences. In fact, more so in the RSI at that point. And then, but still just bumping up against this resistance, finding support again on this line right here, and then piercing through it today with some momentum. Now it's going to have to hang out above there and really continue to move. That's a pretty bullish look for gold. So that, of course, is going to bode well for our clients because we have a not small position in gold currently. Okay, so, folks, I think that's probably enough for now. Normally I give you just a paragraph or two or three on the morning note and then tell you about markets and leave you with a quote. We'll be back to the written version. I'm sure some of you probably appreciate that more. But in the meantime, I will continue to report to you and tell you what's going on via the video. Thank you, folks, as always, for watching and listening. Be back again very soon. Take care. Bye-bye.